MVIS, trading symbol for Microvision. In the original and innocently campy Star Trek series, Scotty would confound everyone by using his time to happily catch up on his technical journals. I had a couple of spare hours the other night and did something similar. I grabbed my box of annual reports from one of my investments, Microvision, and went through every annual report since 2000. Recently we, had the annual stockholders meeting. Before I attended, I made a quick calculation that was humbling. Stock dilution had kept the company alive, but dramatically reduced the power of my earliest shares. It's time to do a more detailed analysis. Cue up Netflix and stream Star Trek Enterprise, the prequel, for some background soundtrack. Startup corporations start with some money, probably not enough, shares of stock, a surprisingly arbitrary number, and a plan. If the money starts to run out before the plan succeeds, then the company finds more money somewhere. Sometimes they go into debt, which leaves them with expenses and another set of financiers to report to. To avoid that potential trap, others will issue more shares of the company. If they start with 10 million shares, they can issue more shares. That sounds simple, but the number of shares to issue, the price of the shares, and finding a large enough buyer gets complicated. Issue another 10 million, and find that owning 50% of the company has become 25% of the company, and welcome new owners and influences into the corporation. Done right, a bit of dilution can bridge a small gap in the plan. Taken to an extreme, and dilution can turn something flavorful into something bland. My investment strategy has been long-term buy and hold. Microvision has been testing this. My quick calculation was to determine the power of my earliest shares. Shares are frequently valued by the price, but they also represent a fractional ownership in the corporation. I've held Microvision since 2000. Those first few shares have been reduced to 1/46 their original fractional ownership, about 0.02% of their original influence on votes. My curiosity kicked in. What about the shares I bought along the way? How quickly was the shares diluted? How frequent was it? Did that change when management changed? At the stockholders meeting, the CEO or the chairman of the board, I can't remember which, pointed out that more dilution was possible to either overcome a shortfall or to fund growth. It was time to better understand the story. 2 data points, 2000 and 2017, weren't enough. I thought it'd be eye squinting enough to go through the annual reports. In those 17 years, I collected 23 reports and announcements where the company published a share count. Squint, scribble, type, sort, and coerce Excel into producing some simple results and charts. The most recent number I found in a report was for April 13th this year. 68,122,274 shares. That means that owning one MVIS share effectively means owning 164,222,274th of the corporation. Easier said, own 1%, buy 681,223 shares. Simplistic and for many investors immaterial. But once upon a time, I strived to own 0.01% of my investments at least. That way, if the company became worth $1 billion, my investment would be worth $100,000. Billion-dollar companies are considered small. Corporations get big, which means that if the company was truly successful and reached $10 billion in my investment, would have made me a millionaire. I try to keep my personal finance simple. So this chart is going to get referenced here in a bit. But this is the share count from when I first started holding shares in the company. Keep in mind the company goes back further than the dates that I have here. But just look at that chart. It starts down way under 100,000, and depending on how you look at it, ends up almost up to 600,000. The blue line on the chart represents the data from the annual reports. In that decade, in that first decade, the number of shares increased about tenfold. Then there's a dramatic drop. That should be vertical, but I didn't want to take the time to force it in Excel. That was the dreaded reverse split, a 1-for-8 reverse split, an event the company undertook to keep the share price artificially high and hopefully avoid delisting from the stock exchange. It's not uncommon for companies to do that. The other two lines provide two perspectives on that split. The red one takes today's shares and tracks them back as if the split started with the start of the company. So 1/8 as many shares. The green line or 8 times as many shares. The green line assumes the split never happened. If you bought after the split, you might not care about the early years. If you've held MVIS for over a decade, that early line may have more meaning for you. So now this chart takes that down as a percentage. Forget about how many hundreds of millions it is, but out here in 2017, that's a factor of 1. You buy a share now, it's worth a share, and of course that's always been the case. Take it back to when I first got it, and you end up back with that number I was talking about before, which is 1/46 of what the value is now. That means that the effective ownership you bought back then has been diluted by that much. And that's the way dilution works. And let's just say that again. A share is a share. The ones I bought in 2000 are as valuable as the ones I bought within the last year. But buying 11,000 shares in 2000 effectively bought 0.1% of the company, of the corporation. If a shareholder didn't buy any more shares, those 11,000 shares represent about 0.002% of the corporation. A share is a share, but a share is also a vote. The voting power of position is diluted with every dilution. While long-term shareholders are appreciated, their influence is reduced with every dilution unless they buy more shares. I haven't been able to keep up. I've rarely sold and have been buying more as the corporation, the technology, and the market progress. With ideal hindsight, the best investment would have been to invest in something else and now buy Microvision shares. Ideal hindsight is a fantasy. One of the reasons for long-term buy and hold is because dynamic companies can be dull for years and then become overnight successes. Guessing that timing is guessing. I may write another blog post based on my view of Microvision after every stockholders meeting. Every year had reasons to buy more. Maybe this is a year. Maybe this time is different. It seems so, but that dilution curve doesn't show signs of stopping. Plot it on a logarithmic scale, and it is closer to a straight line, as if it's ingrained in the corporation. I'm going to get there, trust me. There we go. I don't have a straight edge right here, but the shape of that line, the shape of that is not a curve, that's a line, is effectively a tenfold dilution every 10 years. That's immaterial, of course, if they no longer dilute the stock, but I don't know if they're going to stop doing that. As an investor, I only have to work from what I know, with some intelligent guesses, of course, because there's no perfect knowledge. This is intended as less of a commentary about Microvision and MVIS and more as a learning experience for long-term investors of small corporations. I also know that the Microvision investment community is so starved for information and data that they may be the most engaged readers. Investing treated me well for over 30 years. Then my triple whammy hit. 6 years out of 4 decades doesn't sound so bad unless you're living in those lean years. I could write thousands of words more about my strategy, and did. Friends encouraged me to write the book Dream, Invest, Live. If you want more, the book's available in print and as an ebook. Dilution is one of the realities in investing in individual stocks. I've written before about how dilution, share price, and market capitalization interact, but rarely have I had such a chance to analyze even simply the effect of dilution on what it means to own a piece of the company. And where'd that picture go? There we go. This chart shows the price of the stock with time, with and without the split. The red line is the raw price. If you went online and you checked the price that day, that's what the price was. But when you take the split and you multiply that price by 8, you can see that there's been quite a dramatic drop. That green line is showing that the stock has gone from 40 down to effectively, lately it's been about 2. To make that more dramatic, let me go over to the current stock chart, thanks to Google, and we'll see if this thing comes up. It's got to refresh because, of course, it's trying to do everything and be so smart about it. That is a flat-looking chart right now, but if we look at all, take a look at that. There's a peak right there that is in excess of $400 a share, and now it's at $1.93. As much as that share price has gone down, the number of shares has gone up, and one of the consequences of that is that the market cap keeps changing. Now, the market cap is simply the number of shares times the number, the price of the shares. As much as I am not happy with dilution, I have to admit that, well, the market cap is the blue line and it's been bouncing around in the last 10 years, but within the last 5 or 6, it's actually been trending up. My share of the company has been going down in terms of percentage ownership. The number of shares I've owned has been going up. The price has been staying relatively flat in a lot of ways, but the market cap has gone up basically, just looking at that chart, about a factor of 4. As much as some folks may complain about management, and I weigh in on that as well on occasion, from the market cap measure, the fact that the size of the company, that's actually something that's pretty impressive. Dilution is one of the realities of investing in individual stocks. Now, there are companies that never dilute, and I'm not going to go to the level of trying to investigate all 8,000 publicly traded companies. That would just, that's for somebody that's got more money, kind of like, Goldman Sachs. I've written before about how dilution, share price, and market capitalization interact. I'm just repeating this because I'm there. But rarely have I had such a chance to analyze even simply the effect of dilution of what it means to own a piece of a corporation. Being able to invest in stocks is one of the ways for people's money to make money for them. It is one of the ways to build wealth or fund a lifestyle that doesn't rely on working forever. It is also one of the ways that individuals can do more than complain about corporations. Buy a share and vote. But don't be surprised if that vote doesn't count quite as much as it ages. Scotty retreated to his room to read technical journals. I just spent a Friday evening typing this post. I think it's time to polish, publish, and share it, and then watch the next episode or 2 of Star Trek Enterprise, who's, if you listen to the screenplay, the soundtrack, key line is, "I've got faith that lives in the heart." And I have to admit that owning Microvision shares requires that.